Are you an NFT artist or seller? You may be surprised to learn that sales taxes applies to every NFT that you sell. There's one problem with this. Almost no one is collecting and remitting sales taxes on NFTs. In this video, we'll go over when sales taxes apply to NFTs, in which states they apply, and how you as an NFT seller can collect and remit sales taxes appropriately so you don't get a surprise tax bill. What is sales tax? Sales tax is a tax on goods and services that is usually collected at the time of sale, and it's calculated as a percentage of the overall sales price. The sales tax rate can vary depending on the state and the taxing jurisdiction where you're selling the goods or service. Sales taxes are usually collected by the state taxing agency and used to fund state government programs. The exact rate that any seller will pay on sales taxes can vary by the state that they're operating in, the goods that they're selling, and even within the state, the specific county in which they're operating in. NFT sales taxes likely are applicable in over 31 states currently that already apply sales taxes to digital products and goods. Historically speaking, state sales taxing agencies take existing sales tax regulations and then apply them to new technologies as these new technologies proliferate in use. So in many of these states, there may not be explicit NFT guidance currently on the books, but the sales tax regulations most likely in these states already apply to NFTs. Now, with that being said, we currently have many states that have released explicit guidance related to NFT sales taxes, which I'll cover in detail here subsequently. These states include Pennsylvania, Minnesota, Washington, along with several other states. What states currently provide explicit guidance on NFTs and sales taxes? Currently, at the time of filming this video, there's at least 4 states that have provided explicit guidance related to NFT sales taxes. Now, keep in mind, there's also over 31 states that already tax digital products and digital goods, and these states likely are going to apply sales taxes to NFTs, but they've yet to apply specific guidance. Now, the first state to issue NFT sales tax guidance was Pennsylvania, and that was on June 11th. The sales tax rate in Pennsylvania is 6%. The second state to come out with NFT sales tax guidance was Washington State. This was on July 1st, 2022, and the tax rate in this state is 6.5%. Minnesota was the next state to issue explicit sales tax guidance on NFTs during August 2022. The sales tax rate in Minnesota is 6.875%. The last state up till this point to release sales tax guidance related to NFT sales taxes is Wisconsin, who released their guidance on October 28th, 2022, and their sales tax rate comes in at 5%. I expect to see many additional states release explicit tax guidance related to NFT sales taxes. Again, keep in mind over 31 states already tax digital products and goods, and these sales taxes in these states will likely apply to NFTs as well. So when exactly do you have to collect sales tax if you're selling NFTs? This is going to come down to your nexus. You can have nexus in one of 2 ways. You can have a physical nexus, or you can have an economic nexus. Your physical nexus simply means that you're going to have offices, employees, warehouses, some sort of physical location in the state or taxing jurisdiction in question. If this is the case, you're likely going to be liable to collect sales taxes for all sales associated with that state or taxing jurisdiction. The other type of nexus that you can have is economic nexus. Economic nexus is going to look at 2 things related to your sales: the total dollar amount of your sales and the total volume of units that you're selling. Depending on these thresholds that vary from state to state, if you exceed a certain dollar amount or you exceed a certain volume of units sold, you're going to have what's called an economic nexus. And even if you're not physically located in that state, you can still be liable for collecting and remitting sales taxes for any NFT sales that are associated with that state. Additionally, when you're collecting and remitting sales taxes, chances are if you're selling NFTs, you're going to have sales tax liabilities across multiple states and multiple taxing jurisdictions. You'll notice that the filing deadlines across all these different states and taxing jurisdictions can vary greatly depending on where you're filing. Some of your tax reporting will be due on a monthly basis, some will be due on a quarterly basis, and even if you're looking at due dates that are on a monthly or quarterly basis from state to state, these due dates may still be on different days specifically on any given month or quarter. So it's very important to consider both your economic nexus as well as your filing deadlines on a state by state basis. So how do you collect sales taxes when selling NFTs? The first step is going to happen at checkout when your customer is purchasing an NFT, and you're going to have to collect the relevant information in order to determine the appropriate sales tax to charge them. This means that at minimum, you're going to need to collect the zip code from this customer when they're purchasing the NFT. And the reason is because we need to determine what their address is so we can know what sales tax rate we should be charging them. So that's step number one. Once you're able to collect their zip code, you can then know the tax rate that you should be charging them. And then you can calculate this percentage in terms of the NFT that you're selling the crypto in, and then charge the appropriate fee for the overall purchase of the NFT. So if you're selling an NFT for 1 Ethereum and the person that you're selling the NFT to is located in a state with a 10% sales tax rate, then ultimately the amount that you'll collect from this customer when they're purchasing the NFT would be 1.10 Ethereum. So you would have the 1 Ethereum for your total sales amount, and then the 0.10 Ethereum, which would be collected and remitted to the state taxing agency appropriately for sales taxes. So it's very important that you're correctly calculating this at checkout in the native cryptocurrencies to accurately collect the right amount of sales taxes and to make this purchasing process seamless for your customers. This means that you need a system that can basically do this all automatically at checkout. That's what me and my team have built at Digital Impost. It enables you to collect your customer zip code before they purchase an NFT. Using our algorithm, calculate exactly how much sales tax they owe based off of their zip code and based off of their location. And then you'll be able to collect this amount in the native cryptocurrency that you're selling in at checkout. After you've taken these steps, the next step is the tax filings and remitting of your sales taxes. To do this, you're going to need to be tracking all of your sales data appropriately on the blockchain using APIs that are connected to the blockchain. We've also built this ability into Digital Impost. So you'll be able to both calculate, collect sales taxes in your native cryptocurrencies, and then on the back end, have all the appropriate information to file the tax forms with the appropriate sales tax jurisdictions and pay those sales taxes to those appropriate taxing agencies. So these are the steps that you need to take in order to collect sales tax: get the zip code, charge the sales tax, and then remit the sales tax to the. So one of the biggest challenges for NFT sellers that are collecting and remitting sales taxes is sourcing the sale. What I mean by sourcing the sale is determining which taxing jurisdiction or which state you should be collecting and remitting sales taxes for, and what sales tax rate you should be charging. We've seen states like Washington State, who have released NFT sales tax guidance, provide preliminary guidance on how NFT sales should be sourced for sales tax purposes. The first level of this is considering your customer's address. If you're able to get your customer's address or the location that your customer was in when they were purchasing the NFT, this is the taxing jurisdiction that the sales tax should be sourced at. In the event that you can't collect this information, or you haven't collected this information for NFT sales that you've already completed, then this is going to be sourced based off of your location as the seller. If you're not appropriately collecting and remitting sales taxes for all of your NFT sales, you are creating a very large risk for yourself and your company. Firstly, we've seen states like Pennsylvania indicate that NFT sales taxes can apply retroactively. In the case of Pennsylvania, they've said that they can go back up to 6 years in the past for NFT sales that have already taken place to pursue tax collections on those. We've seen similar statements from states such as Washington related to retroactive NFT sales taxes. So if you've completed NFT sales over the past years and you didn't collect sales taxes on those, you have a large tax risk in this regard in terms of these states coming back to collect sales taxes. Additionally, we've seen states like Washington indicate that if you're not collecting the appropriate customer information, this isn't going to get you off the hook of paying sales taxes based off of their sourcing hierarchy. If you don't have your customer data, the sale is most likely going to be sourced in the state that you're selling from, and sales taxes will apply based off of the rules in that taxing jurisdiction. So, there's a very big risk in terms of these state taxing agencies coming back to NFT sellers and demanding unpaid taxes that these companies may or may not have to pay. Additionally, this is shaping up to be almost a Wayfair 2.0 moment for the NFT and digital asset industry, where once this becomes widely publicized that specific companies or industry-wide are neglecting to collect and pay sales taxes to state taxing agencies, it's not going to look good for specific companies, and it's not going to look good for the industry as a whole. So there's a huge tax risk to not collecting and remitting sales taxes, as well as a reputational risk. Me and my team at Digital Impost have been tracking the issue of NFT sales tax compliance since its inception, and we've created the industry's first sales tax compliance software for NFT sellers and digital assets. This is a complete end-to-end solution that allows NFT businesses, NFT marketplaces, and businesses that are accepting crypto to comply with state regulations related to NFT sales tax and remittance. Our software allows you to accurately calculate sales tax liabilities based off of your customer's nexus, collect the appropriate amount of sales tax in native cryptocurrencies in real time at checkout. And then on the back end, our system provides the relevant reporting and information both from your customers and the blockchain that you'll need to appropriately report and file your taxes with the state taxing agencies. And we actually automate the process of preparing and filing those tax forms with the state taxing agencies. So Digital Impost is a complete end-to-end solution for NFT and digital asset sales tax compliance.